Yo, what's up, traders? Pete, once again from Iconic Day Trading. Second video, following the first. I guess you can say as an intro and clarification that I am coming back to the chat room world and coming back with a vengeance, like I said before. So I rambled on enough on the first video. What I'm going to do is just strictly stick to some charts. And not really go over my method, but what I look for is pretty much, we'll call it what I look for when I get into trades. So in the first video, I pretty much told you, stocks that I trade, I don't trade pennies. I don't trade the crowded stocks because there's just way too many variables. And it's hard enough getting all the probabilities in your favor as it is now, much less, all the new money playing these penny stocks and all the rooms and everything else. It's just not worth it, and that's not the way you trade anyway. So let's start off with PII. And again, some of these charts might be old, some of them might be current. It doesn't really matter. What matters is you see what I see. While I'm talking about it, because it's gonna come in handy if you happen to become an iconic trader. It's how you're gonna make your living, and as simple as that. You got to have to learn how to trade, okay? And it's not gonna be easy. It's gonna cost you money. The amount of money that it's gonna cost you is all up to you on how much work you're gonna do. Or if you're going to believe in the bullshitters that are out there telling you that, you can make 10 grand, I'll have you making 10 grand next week. Bullshit. All right. He'll blow up your freaking account and he can care less. Bottom line. Okay. That's just the way it is out there for the majority of the rooms. There are some rooms that are good. Okay. Like I said, one or two. Okay. And I'm talking about chat rooms. Okay, I'm not talking about prop firms. So let's get on with it here, guys. In the first video I did a little while ago, I was talking about some of the indicators that I use. So again, I'm going to cover that if you didn't capture them on the first video. All my moving averages are simple, not exponential. Okay, I use the 9, 20, 50, and the 200 moving average. I do use the previous day open close. I do use VWAP. Very important that you need VWAP and you need a standard deviation. Okay, standard deviation is probably more important than VWAP. I use volume and I use MACD. That's it. Okay, then you got the candlesticks that come into play, and you only really need to know, like, I'm going to say probably 4 or 5 candlesticks at the most. Anything else is just overkill because, I trade off a 2-minute chart, like I said, unless you're trading, off a 15-minute chart or daily chart, it's a freaking 2-minute candle. Okay. Does it matter? Yeah. Is it matter as much as a candle on an hour chart? Absolutely not. So just because I have, a doji or a bottoming tail, doesn't mean I'm going to take the freaking trade just based on a 2-minute candle. Everything else has got to line up. You got to have the volume, the MACD flip. You got to have it coming off the upper or lower deviation band. You got to have a reason aside from, oh, I see a candlestick. Good. Light the fucker up because it doesn't matter that much. All right. Hope my language doesn't offend you. If it does, then I'm not the room for it either. Because trading is very emotional, and I said that in my first video. And every now and then, you'll hear the F-bomb come out my mouth. And when you're trading, and when you're trading large shares, large volume, occasionally it happens. So be it. I'd rather do that than, punch my monitor, throw my monitors out the window. So let's move on. This stock here, PII, you can see the day before. This is a 2-day chart. Should be a 2-day chart. It is a 2-day chart. Again, 2 minute. It's a 1 day. No, 2. 2-minute chart. Okay, my 2-minute chart is what I trade off of after I get confirmation from, 5, 10, 15 daily and possibly the monthly, depending on how much of a setup it is. If I get it set up on the monthly chart, then, I go in large. And it'll probably end up being a swing trade. Simple as that. Everything else is a day trade. It can last anywhere from minutes to hours to the day. I very seldom will hold my trades overnight unless that was the plan when I bought or sold the stock short. All of my trading, I shouldn't say all, majority of my trading is shorting. I'm a sell side guy. I love shorting stocks. To me, it's just like an art form. It doesn't mean I won't take longs, because I will. But I just always look for stocks, because 9 times out of 10, they'll go down a lot faster than they go up. And that's how I learned to trade, shorting stocks, and that's what I stuck with. And that's really what my expertise is in. So, on this previous day here, this previous day open close, you can see all day it's just in this channel, and if you traded this stock in the channel all day, this is probably about a $1.50 channel, maybe even $2 channel. This is all you need. I mean, look at this chart. I mean, if you just look from here, look to the left, this is a channel. It's a beautiful channel. It respected the upper deviation band perfectly. So, like, Pete, what does that mean to me? What are you talking about? What I'm saying is, every time I hit this upper deviation band, right, and had the high 82.14, okay, that's a short. Why am I saying it's a short? Well, you look to the left, okay? It didn't take out the upper deviation. High of the day, okay, then it faded back down to VWAP. Can't see it right now, but you can see the 920 cross right here, which is another one of my faves, going down to VWAP, right? What do it do with VWAP? Well, stocks usually hold support or resistance at VWAP, and that's probably tenfold when it comes to the standard deviation, okay? So you short it up here in the 82, right? Say you get filled to 82. Even if you get filled to friggin' 81.90 or whatever it is, no one's going to top tick all the time. You take a short, you look for VWAP as your first target. Why? Again, VWAP is usually support and resistance. A lot of algos use VWAP, and a lot more use the deviations. So, in order to try to compete with them, because in essence it's getting harder and harder every day, you have to make sure that you have at least 3 or 4 probabilities that are in your favor before you take a trade. Okay, because you get one program that's going to run, it's going to wipe you out. Okay, so take a short, say 81.90, come down here, and we'll just call this, I'm just going to call it $80. Okay, call it 81, whatever. Cover VWAP. That's a fast 90 cents. $900 on 1,000 shares. Painless. Why do I say it's painless? Because as soon as you took it short, the high of the day is your stop. Let it work. Let it run. So it came down to VWAP. It respected the VWAP, right? Nothing happened. So you look down here. I'm always watching these little MACDs. Starting to see a little bit of buying interest come around on VWAP, right? People are covering, and people are going to take it long. Okay? You got a little volume spike here, right? So, now you got a little 920 cross again to the upside that you can't really see. So what do? Bam. Cover your short, flip it long. Okay? Take it long here, coming off, VWAP coming right back up, and where's the stop again? At the upper deviation line. That upper standard deviation line, okay, in accordance with the high of the day. If it breaches that, that's your stop. Well, you can see it never breached it, never breached it, never breached it. So for me, what does that mean? Well, if I'm long, this is my target, right, to sell it. So I know it's going to stop here. Why do I know? Well, I have a feeling because I'm looking to the left and I see it's getting rejected here all the time. Okay, so that's where I'm putting my sell order in ahead of time. I also have my position. Okay, and then we'll see what happens. But now we can see, okay, it's grinding. It's not taking it out. So what am I going to do? Well, I'm going to do what I did over here. I'm going to take it short. Why are you going to take it short? Because the bitch isn't going higher. It's respecting its upper deviation, standard deviation. So you take it short and you look for VWAP as your first target. Okay? But in addition to that, right there, look at the volume. You got a nice little pickup in volume, right? Then you got the 920 cross. So it hit VWAP, all right? So now you look to the left. You can see the 50 is a little bit higher than it was before. Okay, so okay. You see it right now. You see a little support and resistance line right there. Okay. Maybe I would have covered all of it. Maybe I would have covered half. Looking at it, I probably would have covered probably half just because of the volume. Right? And because you look to the left, there's a low. So I would expect the other half, hopefully, to finally break and fade down to the lower deviation, which is where I would cover all or the remaining shares that I have left. Why? The lower standard deviation band is very powerful. Look to the left. That was your prior support. So you're going to anticipate it being your prior support again. Then what happens? You got the MACD flip. You got some green value coming in. 920 cross. You take it, you flip it long. Right? I mean, this is just point there, point there, point there, point there. And you're not even like stressing. Like there's nothing to stress about. Because it's in a channel and it's respecting the lines. Like days like this are the ones that are going to make you. Because you can just make thousands of dollars or even hundreds of dollars. It doesn't matter. Just riding the channel, flipping from long to short. Everything is set up. You have your predetermined stops. The chart's telling you what to do. You just got to have the balls to do it. Not get scared. You know, let the stock work. So many people just take themselves out of a winning trade. You know, they'll lose $500-600, you know, and then they'll make, 200, and the stock keeps on going in their favor. You know, that's not good. You guys know it. Well, for me, my boys, my traders, it's got to be at least 3-to-1. At least 3-to-1 risk reward. So if I'm risking $1,000, I better make 3. And if you don't follow that way, you're not going to last in this business. You need to have a solid risk reward plan in place. You can do the math. If you're losing more than you're making, it's just a matter of time. Just a matter of time. So again, going into the next day, earnings, conference call. I usually don't play earnings and conference calls. Just not worth it for me. Okay. But what I like about this, okay, and what I did play was this nice little double top right here. Okay. Look to the left again. Previous support now becomes resistance. Look to the left. Double top. You got a partial flag. 920 cross. Use a 200 as your stop. Right? Take it short. Ride it down. I would look for this area right here to cover. Okay? Not be greedy. Because especially you got a VWAP right there. So I probably would have covered in this candle. Okay? Big green volume, which is nice. MACD still going down. But I would have covered. Look to the left. That's why. Simple as that. And then again, you can just bang out this channel all day long. All day long. That's why I like the higher price stocks. You can make a point or two. Very easy. No stress. You just got to control your trades and let your trades work for you. Running out of time. Volume 3 coming up.